Alright, YouTube, back with the most boring channel on the planet, Junie Smallpy. Talk about some economic news, what's in the headlines today. Did some homework for you and found some interesting stories that a couple of you might appreciate. I went ahead and posted the links to these on the Junie Smallpy Facebook page as well. That way, if you guys want to do your own reading, kind of read the whole article, follow links, do searches, you can go ahead and do that and take it a step further. So me and the Morgan dollar, we're back. Here she is. She likes to take part in the conversations too. Mrs. Liberty, as well as our best friend, the 1 ounce gold eagle. And then we got, for some reference here, all of our currencies up here for you to pick and choose from, which one you want. Alright, well, we're going to try to wrap the Cyprus thing up. I think it's a dead horse. It happened. It is still unfolding. But they opened today, the banks opened, and they have some capital controls taking place. One of the things they're doing is depositors are being limited to 300 euros a day for to withdraw, so you can't go in there and take all your money. Sounds like that the European Central Bank, the European Union, sent truckloads of cash. They had to fly it in, obviously, because it's an island, but armored trucks full of euros cash were unloading at multiple bank branches on the island of Cyprus. So they obviously didn't have the currency or the cash on the island to meet the depositors' expected withdrawals for today. This really affected, it looks like, according to CNBC, in an article I watched, some video clips of the actual withdrawals and the bank lines this morning and the security and all the drama as it unfolded. There was a large amount or high number of elderly people there getting their withdrawals, and they said the reason why is because a lot of the elderly Cypriots do not use debit cards. So they choose not to. They don't, some old people don't like technology. They don't like using a card to go get their money out. They like to go to a bank the old traditional way, talk to a teller, and make a withdrawal. So they were negatively and adversely affected by this, probably more severely than some young people. So the elderly, and they're probably a little frightened. So they're getting their money out, and it looks like it's kind of wrapping up there, but it's definitely going to shatter the trust those people have in the banking institutions, the government, and the Cyprus financial environment, I would guess. It would here, I hope. I can imagine any of us how we would react to this situation. Alright, so let's get to some gold and silver news. I know there's a couple of good silver bugs out there. So if you wait, there's a good article here we're going to talk about for silver. Central banks' gold purchases in 2012 were the most since 1964. According to the International Monetary Fund in February, the Central Bank of Mongolia increased its gold reserves to its highest level since August 2008. The country has been purchasing gold bullion for 3 consecutive months. Its reserves have increased from 1.5 metric tons to 5.8 tons, or about 287%. Source for that is Bloomberg, March 26, 2013. The Bank of Russia, as we've talked about in the past, we all know Russia's gobbling up lots of gold. They've been purchasing gold bullion. It bought 7 tons of the yellow metal in February to bring its total gold bullion holdings to 796.9 tons. Turkey, the country which has started to use gold bullion as collateral, increased its reserves by 5.7 tons in February, bringing its total holdings to 375.7 tons. Again, that's Turkey. According to the World Gold Council, central banks around the world purchased 534.6 tons of gold bullion in 2012, which was the highest amount since 1964. Okay. Central banks bought more than $3 billion of gold in 2013 so far. And that's by UBS. You can go look up that article. All right, here's an interesting one. Turkish central bank. We just talked about Turkey, so there's some activity taking place there, obviously. The Turkish central bank is raising its gold and foreign currency reserve coefficients by decimal 1 points. Now, this is a little complicated, even for my simple mind to understand. So you have to read the article. Some of you might be able to really understand and interpret some of the information that's in that article more so than myself. It's from Reuters. So it looks like Turkey's central bank raised the amount of gold and forex, foreign currencies, foreign exchange, that lenders have to provide to hold a portion of their required reserves in the commodity and in foreign exchange. A move which will boost the central bank's gold and forex reserves. The bank raised its reserve option coefficients for gold by 0.1 points for banks wishing to hold more than 15% of their reserves in gold, meaning they will now have to provide proportionally more of the precious metal in order to do so. Okay. New Zealand considers Cyprus-style banking failure. So, Australian, and I know you guys are different from New Zealand, but we do have an Australian viewer out there. But those of you in that region, if any of you are from New Zealand, you might want to go look up some articles on this and do some research and prepare for what might be coming down the road there. New Zealand considers Cyprus-style banking failure. Solution, okay, that should have been bold. My printer, sometimes I don't do, when I cut and paste these, it doesn't work too well. Alright, New Zealand depositors could face a Cyprus-style tax on their bank accounts, as the government is planning to impose a similar strategy on its banks, warns the country's Green Party. New Zealand is facing a similar bank failure to Cyprus, is likely to adopt Open Bank Resolution, or OBR, which will see small depositors lose part of their savings in favor of a big bank bailout. Green Party co-leader Russell Norman said. Alright. The country's finance minister, Bill English, supports the Open Bank Resolution. Alright, and there's a more lengthy, obviously the article is much longer than that. You can go find it and read it. I'm just giving you the highlights here. Brazil, inflation higher than expected. Okay, there was an article on that. Apparently it's Brazil's experiencing higher inflation numbers than what they expected for the year and even last year. Attention Canada, Canadian viewers, if you're out there. The loonie slides as inflation rises more than expected. So Canada's seeing some inflation as well. Again, this should not be news to really anybody. Ever since the financial crisis and ever since 2008, when all this started going, what has been the main solution for the world economy? What have they been doing? Well, we all know it. You guys, especially out there that take part in the conversations of this channel, realize that all they're doing is just printing off more and more of this and adding zeros to bills. They're just cranking out this fiat currency, this paper debt that's unbacked by anything physical or of real value. So, obviously, the value, the purchasing power of these currencies is dropping. I mean, really, like we've discussed before, is economics that complicated to where people don't grasp and understand it? I think I took my first economics class in high school. I read the book on it anyway, and it was way back in like 1995 or 6. And I remember the simplest chart and the simplest explanation of the foundations of all economics and where it pretty much starts. And it was the supply and demand curve. And the whole concept of price being related to supply and demand. So obviously, if the supply of something goes up dramatically and demand kind of stays the same, the price of that will drop. And then with gold and these things, if the supply of gold is dropping, but the demand for it is increasing, as we've seen with world demand, the price of gold will then go up. So when they increase the supply of paper currencies and they mass produce them, the value and the purchasing power of these currencies goes down. And I wanted to get to a point. We're going to talk about the pension thing. We've got to remember to talk about the pensions, and then we're going to talk about the FDIC and their liabilities exposure if a Cyprus situation were to occur in America. So let's remember that. I did post a video on that from Peter Schiff. You'll see on the page as well. All right. So Brazil, inflation. Canada, inflation. Pension funds could send gold ETF prices soaring. This is a pretty interesting read here, and it makes a lot of sense. So pensions worldwide hold more than $27 trillion in, I guess you'd call them unfunded or funded liabilities, pension entitlements or promises to pay in the future. Now, they've pretty much ignored gold for, other than I put not Texas with a smiley face, because Texas, as we know, just recently, was it the University of Texas or the University or the state? It was Texas State or University of Texas. One of those has a pension fund. You can look this up. It's in the news. So they requested and demanded physical delivery of their gold for their pension fund. Smart on their part, right? I mean, if Germany's doing it, they're requesting their gold physically delivered. New York Fed told them 3 to 5 years. Well, I guess it takes a long time to move those bars and ship them. Maybe they're putting on an actual sailboat and has to actually sail from New York to Germany. Switzerland then recently, they're voting on it this week, and because there's a party and a movement there requesting physical delivery of their gold. So pay attention to this. Everyone's suddenly, all over the world, pensions, countries, banks, central banks, everyone's requesting physical delivery of the product. So that should clue you in on something a little bit. If any of you out there have paper gold, you might want to consider bringing some of that home. Yesterday we covered the Dutch bank that's now canceling shipping gold to people, physical delivery. So there's a trend here. We're seeing a trend in gold not being delivered and in being requested to be delivered by physical form by the purchasers or the owners. Back to the pension fund thing here. We get sidetracked faster, don't we? So let's say right now there's 27 trillion held worldwide. Pension money invested in bullion is peanuts at the moment. This is a guy named Toshima told Bloomberg. He's one of the guys they interviewed in the article from Japan. And I posted this on Facebook so you can find this article and read it. If 1% of their total assets, if just 1% of the $27 trillion shifted into metals, the gold market would explode. Okay, so that's just 1%. And pensions are looking at it. I mean, Texas already did. But you can imagine pension funds right now, they really don't have a whole lot of other options. They can't be stuck in the currency markets. Those are depreciating. Real estate was proven to be unstable. Why buy stocks at record highs right now when they've already experienced heavy losses there? I know many teachers' pensions nationwide suffered dramatically due to high risk and exposure to stocks whose prices seemed to drop precipitously in the last few cycles that we went through. All right, Eric Sprott was interviewed today or yesterday. I believe it was yesterday, but I just read the article today. And here's a little chart that goes with the article. He's a big silver guy, predicting silver $100 within 2 years. Now, some of you might say, oh, we've heard this before. Well, silver did go up pretty high, 50, 48, 49. And remember, it's a volatile metal. You got a lot of industrial demand with silver, but it does. The chart looks pretty good. 2004, there it is. 2005, 2008, 2009. I mean, it does pretty good. I mean, some people have had some losses just because they bought up at the peak, and obviously you don't ever want to buy at a peak, but sometimes you don't know that it's a peak at the time. Gold's been a little bit more stable. My personal rule is I like to be more exposed. I like gold, and I buy more gold than I do silver. Typically, when I buy silver, it's because I can't afford gold at the time, and then when I build up a nice little position in silver, I wait, and once the price gets to around 40 or 35, somewhere in the range of 35 to 40 to 1, I will sell my silver and buy gold. It just, that's how I like to work it. So I smaller, more portable, takes up less space. I mean, if I had $1,600 worth of silver right here, it'd be a little bit bigger pile, a little heavier to move around. So, all right. So that's the silver news. Okay, Peter Schiff was interviewed, and who interviewed him? Found the article through Lou Rockwell. But they were talking about, okay, the Cyprus situation. And you've got American banks that are obviously unhealthy. And there could be a problem there in the future. And there most likely will be. So let's say there is. Well, American banks have, I believe, what did he say? It's in the trillions. Like 27 trillion. No, that's that number there. 10 trillion. Well, anyways, I think it was like 10.7 trillion might be the number. Again, I posted the article so you can get the exact numbers there. But let's just say, for sake of argument, it's $10.7 trillion in savings that the U.S. citizens all have tied up in these accounts, savings, checking, or whatever, in banks. The FDIC, the Federal Deposit Insurance Corporation, they only have $33 billion as insurance to go bail out banks and depositors if things went sideways. That's not a lot of money, especially when the $33 billion is there to insure the $10.7 trillion. And I believe the FDIC, according to what Schiff said, their money is tied up in treasuries, so they will have to sell the treasuries in order to get the dollars in order to bail out the banks, which means they'll have to print off or monetize more money, causing inflation, driving down the value of people's dollars anyway. And a lot of times, like Schiff said, most likely what they will do is the government will probably make the wrong decision here. In order to ensure and back up and prevent any depositors from suffering losses, they will just make more of these, print more of these, and then drive down the value. Hold on, I'm going to sneeze. I'm allergic to dollars, sorry. Pardon me. So let's say you don't trust banks, but you don't have gold. But you have wads of this stashed in a safe because you're not getting interest anyway, so why keep it in a bank? Like, why put your money in a bank if you're not getting any interest on it whatsoever? Well, let's say you have giant pickle jars stuffed with it buried in your yard, or it's stuffed under your mattress, or it's up in your attic, wherever you keep your large hoard of cash. Well, the problem with them bailing out all of these banks and coming up with a giant bailout package, which is what they most likely will do. So they just start, here's your savings over here, fixed amount, and all of a sudden they print off a big wad of new cash and they just drop it, boom, to help all the other depositors not suffer losses. Well, because the supply, this goes back to the whole supply-demand thing, the supply of all these dollars just increased nationwide, the money supply went up, the value and the purchasing power, what you can get, what you can buy, energy, food, goods and services with your savings, your dollar, just dropped. You're going to get less with this. You will be able to purchase less. So in a way, as we've talked about before, the inflation tax, they robbed you, similar to Cyprus, a little bit more covert. It's invisible, but they took wealth, purchasing power, strength from you, a saver. Remember, savers are the ones that get the most affected. You can't print this stuff off. Okay. Remember, this is $1. $1, which is a specific weight in silver. Now, there's a reason this dollar here is worth around 27, 28 bucks in silver. Because it's silver. Okay, so, and this, remember back in the day, I don't know if any of you are old enough to remember this. I'm not. I doubt any of us are on this channel. There was a time where this right here represented $20. Imagine that. Where this was 20 bucks. Now it's 1,600. well, that's going to wrap it up for today, I think. For the decimal 0.0000001% that are still watching this boring video, you have a homework assignment, and that is to test and see if you're actually still here paying attention. You need to write in the comment field what that means. Let's find it. Nuovus Ordo Seclorum. Nuovus Ordo Seclorum. So, write what that means for me, and do some research on that. Pretty interesting, neat little story. I've always found that weird. Ever since I was a kid, creeped me out. The little eye. Annuit septus. Bizarre. Anyways, look it up, and pay attention. And then, of course, say hello to your little owl. One of my buddies always likes the little owl in there. Where's it at? Come on. I'm sure you've seen the little owl up in the corner. There he is. Perched just on the frame for the one next to the leaf. Sure looks like one anyway. I wonder why. Anyway, don't want to get too carried away with that weird stuff. I think it's funny. It's entertaining always. I don't know if I buy into any of it, but it's just interesting. So, alright. Thanks for viewing. Thanks for stopping by. Keep stacking. And as always, appreciate the comments, the conversations. Don't forget to go over to Facebook and participate there, because it's a way I think you guys can really help out. Sending me articles, communicating with each other, and having more access to some of the articles that I find I'm able to post on there after hours, or if I'm on vacation or doing something and I can't really pay attention. It's a way for me to keep the information flowing between all of us. It's fun. So I will be not making videos for a couple days here because I will be tied up busy doing some other stuff. So this might be the last one for a while, unless something huge happens like tonight or tomorrow or something. I'll try to get one out if that's the case. But for now, over and out. Have a good week and good weekend. Happy Easter to all of you. Happy Easter. Don't want to forget that. Have a good Friday tomorrow. Remember to be quiet from noon to 3. And, bless all of you. Take care.